Vanakkam. In this video, we will be doing a quick revision of Chapter 1 of the CA Final FR study material. If you would like more clarifications and explanations, please refer to the introduction video part 2. The YouTube link is given in the description below. So first, let's discuss the phases of Ind AS implementation. As we all know, the Indian accounting standards were notified in 2015. Companies with accounting periods commencing on or after 1/4/2015 had a choice. This was the voluntary phase. If they wanted for this accounting year 1/4/2015 to 31/3/16, they could have prepared Ind AS, or any accounting year starting after 1/4/15. This voluntary choice was not given to banks, NBFCs and insurance companies. The next phase was the mandatory phase for companies with accounting periods on or after 1/4/2016, which were listed companies other than listed on the SME or Innovators Growth Platform, now called Institutional Trading Platform, with net worth 500 crores or more, unlisted companies with net worth 500 crores or more, holding subsidiary, joint venture or associate of these two companies. Note that it is joint venture and not joint operation. So these companies had to prepare Ind AS for their accounting periods on or after 1/4/2016, that is 1/4/16 to 31/3/17, or if they were following calendar year, then it would be 1/1/2017 to 31/12/2017. The next date is 1/4/17. This is for other listed companies not falling in the first mandatory phase with net worth less than 500 crores. Unlisted companies, there is a minimum net worth criterion in this phase, 250 crores or more but less than 500 crores, holding subsidiary, joint venture or associate companies. So note that not all unlisted companies will get covered by Ind AS. There will still be some unlisted companies which may never be covered by Ind AS. They will have to follow Companies Accounting Standard Rules 2021, that is the 27 notified accounting standards. But if a company gets listed, it has to follow Ind AS, right? The next date is 1/4/2018. This is for NBFCs, both listed and listed. Listed, same exception applies. We ignore those listed on SME or Innovators Growth Platform, now called Institutional Trading Platform, with net worth 500 crores or more, holding subsidiary, joint venture or associate NBFCs of these companies. Then next is 1/4/2019. This is for all other listed NBFCs with net worth less than 500 crores, unlisted NBFCs with net worth 250 crores to 500 crores, and holding subsidiary, joint venture or associate NBFCs of these two companies. The last date is 1/4/2023. As per the SEBI Mutual Fund Amendment Regulations, mutual fund schemes should have their accounts prepared as per Ind AS, and this responsibility rests with the asset management companies. How is net worth calculated? It is paid up share capital plus free reserves plus securities premium account, excluding any debit balances in P&L, accumulated losses, deferred expenditure and miscellaneous expenditure not written off. These are to be subtracted. Revaluation reserves, write back of depreciation and amalgamation should be excluded. So as of now, all listed companies except those listed on SME Innovators Growth Platform and unlisted companies with minimum net worth of 250 crores. Same way for NBFCs. Banks and insurance companies, though the original notification was applicable, they have been deferred by RBI and IRDA. So as of now, it is in deference. They need not follow Ind AS. Who else should follow? For accounts of mutual fund schemes, AMCs should prepare financial statements as per Ind AS. This is a quick snapshot of the entities to whom Ind AS currently applies. So companies except those listed on SME or Innovators Growth Platform, earlier called Institutional Trading Platform, they have to follow as per the phase criteria. NBFC is also phase criteria. Scheduled commercial banks, it was applicable but implementation has been deferred. Urban cooperative and regional rural banks never made applicable. Insurers applicable but deferred by RDA. Mutual funds as per phase criteria. So let's quickly recap the key points on applicability. So if the net worth criteria are satisfied in a year, Ind AS financial statements will be prepared for the next year. So 31/3/25, let's say an unlisted company net worth touches 250 crores. Then for the year 31/3/26, it will have to prepare financial statements as per Ind AS. The only exception was when the notification was first issued in 16th February 2015. At that time, the position was check the net worth on 31/3/14. If the criteria is met, follow for the accounting period commencing on or after 1/4/16 or 1/4/17 as applicable. If not, check 31/3/15. If not, check 31/3/16. So whenever the net worth criteria is met on the earlier date, the applicability becomes locked. So for example, 31/3/14 net worth was 500 crores. Then it would have had to follow from 1/4/16 itself. So 31/3/14 it was 500, 31/3/15 because of some losses net worth came down to say 400 crores. 31/3/16 also it remains at 400 crores. That doesn't mean it can follow from 1/4/17, it has to follow from 1/4/16 only. Next, so when you prepare the first set of financial statements as per Ind AS, you will obviously see whichever Ind AS is applicable for the current year. So 31/3/25 you are meeting the net worth criteria. For 31/3/26 you are following Ind AS. You have to see what all Ind AS are effective for 31/3/26. And Ind AS applicability is irrevocable. Once you are covered under Ind AS, you should always follow Ind AS till you exist, till you are wound up. You cannot go back to the 27 notified accounting standards. Other points, if a parent company is covered by Ind AS, it will have to follow for both its separate financial statements and consolidated financial statements. Fellow subsidiaries, associates or joint ventures are not covered. They will continue to follow for their separate financial statements 27 notified AS only. But for the purpose of consolidation alone, they will have to prepare Ind AS compliant financial statements. Similar is the case for cross-border relationships. So if there is an overseas subsidiary, associate, joint venture or other similar entities of an Indian company which is covered by Ind AS. So let's say company in India is covered by Ind AS, it's a parent company, it has a UK subsidiary. The UK subsidiary obviously is going to follow as per UK accounting standard, but for the purpose of consolidation, it has to prepare additional set of financial statements as per Ind AS. Same rule applies for overseas parent and Indian subsidiary, associate, joint venture or other similar entity. So overseas parent in its consolidated financial statements, it's going to follow that particular accounting standard. Say a UK parent will follow UK accounting standard. So the Indian subsidiary here, for its separate financial statement, it will follow 27 notified AS, but for consolidation it has to prepare another set of financial statements as per the parent company's accounting standards, whichever applies in that country. So similar rule for NBFCs. So there may be a parent subsidiary relationship between NBFC, which is not covered by Ind AS, and another company not an NBFC, which is covered by Ind AS. Say there is a company A Limited and X Limited. X Limited is the NBFC, A Limited is not the NBFC. So A and X may have either parent or parent subsidiary relationship or other relationships. So what if A is covered by Ind AS? Will X, the NBFC, also get covered by Ind AS? What if X is covered by Ind AS? Will A get automatically covered by Ind AS? So these are the questions that ICAI has addressed. So we are specifically discussing the NBFC is not covered by Ind AS because it had extra time. So if NBFC is a parent, then NBFC not covered by Ind AS will follow 27 notified AS. the subsidiary A Limited in our example, which is already covered by Ind AS, still has to furnish financial statements as per AS 27 notified AS. So, NBFC not covered by Ind AS following AS for consolidation. Subsidiary company covered by Ind AS, but still has to prepare 27 notified AS financial statements for the purpose of consolidation by the parent NBFC. So, if NBFC is a subsidiary, so A Limited parent, X Limited NBFC subsidiary, parent covered by Ind AS, NBFC not covered by Ind AS, but NBFC have to prepare Ind AS financial statements for the purpose of consolidation alone, right? So, if NBFC is the subsidiary, for consolidation of the parent, subsidiary NBFC should furnish financial statements as per Ind AS. This table gives you a quick snapshot. Remember, in both these tables, we are talking of the NBFC which is not covered by Ind AS, it is following only AS. Then what will the other non-NBFC company do? If it is a subsidiary and it is covered by Ind AS, it will still have to prepare AS financial statements for the purpose of consolidation. If NBFC is a subsidiary following AS and the parent non-NBFC is covered by Ind AS, then the NBFC has to prepare additionally Ind AS financial statements for the purpose of consolidation. So, now you may have a question, what if the NBFC is covered by Ind AS and that other company is following only AS? Should that other company follow Ind AS by virtue of being a parent, subsidiary, associate or joint venture of this NBFC? There is no question, because all NBFCs are companies. So, if another company is a holding subsidiary, associate or joint venture of a company which is covered by Ind AS, then automatically it has to follow. This analysis is required only if the NBFC is not covered by Ind AS, because special rules apply to NBFCs, right? The next point that we are going to discuss is whether the indirect application can be used for joint operations. The answer is no. So, if a company is a holding subsidiary, associate or joint venture and that other company is covered by Ind AS, then this company is automatically covered by Ind AS through the indirect relationship. But if it is a joint operation, say there is a company A and B, they are working together to produce a product, they are sharing the expenses, they do not have a share in the net assets, then it is a joint operation. By virtue of being a joint operation, you cannot get covered by Ind AS, you have to be a joint venture. And what about section 8 companies? Are they exempt from Ind AS? So, if there is a company H Limited, parent S Limited, subsidiary is a section 8 company, parent is covered by Ind AS. Should the subsidiary also follow Ind AS? The answer is yes. Let us now quickly go through the illustrations. Illustration 1, company A listed on the Bombay Stock Exchange, and they have given us a balance sheet as on 31st March 2014. So, equity share capital, securities premium, general reserve all considered for net worth, revaluation reserve we are not going to consider, miscellaneous expenditure not written off, that has to be subtracted, P&L is to be considered. So, we get net worth. So, which phase the company A falls into, they are asking. So, the net worth we get 505 crores, and since it is a listed company, it has to prepare Ind AS financial statements for the accounting periods commencing on or after 1/4/2016. If it was not listed also, the same phase will apply, because for unlisted companies with net worth greater than or equal to 500 crores, they come in the same phase. So, which phase company A falls into for accounting periods commencing on or after 1/4/2016? Would your answer change if company A is an unlisted company? No, answer is the same. The next is illustration 2. Let us say in illustration 1, balance of P&L is negative 375. So, it is negative 375 instead of positive 75, net worth will be 55. Then if net worth is 55 for listed companies, Ind AS financial statements should be prepared for accounting periods commencing on or after 1/4/2017. All listed companies with less than 500 crores, this date is applicable. But for unlisted companies, there is a minimum net worth criterion. So, if this company was an unlisted company with net worth 55 crores, it would not have to comply with Ind AS. So, in whichever year it crosses reaches 250 crores or crosses 250 crores, from that next year only it will have to start following Ind AS, but presently not applicable. In illustration 3, net worth of company B, an unlisted company, 600 crores on 31/3/14, incurs losses in the next year, net worth comes down to 400 crores on 31/3/15. So, from when it shall apply Ind AS? The answer is for the accounting period commencing on or after 1/4/16. So, once the criteria is met, even if later the net worth falls, there is no change. So, whichever year the criteria is met, the general rule is from the next year you have to follow Ind AS. But the first time the notification was issued, 16th February 2015, there were some transitional provisions. So, as per the transitional provisions, 31/3/14, 15 or 16, whichever of these dates you meet the net worth criteria, your implementation will be decided based on that. So, for listed and unlisted companies which had net worth of 500 crores or more in any of these 3 dates, they had to follow from 1/4/16. So, if all the 3 years the net worth was less than 500 crores, then that listed company could take advantage of the later implementation and follow from 1/4/17. For unlisted companies, not only should it have been less than 500 crores in all the 3 years, it should have been minimum 250 crores in any of the 3 years. Then it will take advantage of the later implementation, 1/4/17. For unlisted companies, all the 3 years less than 250 crores, then it would not have implemented Ind AS, right? So, once the criteria is met, even if the net worth falls, there is no change. Okay, you have to follow Ind AS. So, next question is a slight variation. Here it was 400 on 31st March, but 600 on 31st March 2015. So, 31st March 14 is 400. So, can this company say I will implement from 1/4/17? No. 31st March 14, 15 or 16, any of the 3 years, if net worth was 500 crores or more, it had to implement from 1/4/16 accounting period. So, from when company B shall apply Ind AS? Accounting period commencing on or after 1/4/16. In illustration 5, A is the parent, unlisted company, net worth 60 crores on 31st March 2014. B, subsidiary of A, unlisted, net worth 600 crores. C, unlisted, subsidiary of B, net worth on 31st March 150 crores. So, whether Ind AS will apply to companies A, B and C is the question. So, B is covered by having 600 crores. It has to follow Ind AS from 1/4/16. So, holding of B is A, that is also covered. Subsidiary of B is C, that is also covered. So, all 3 companies have to follow Ind AS for the accounting periods commencing on or after 1/4/16. In illustration 6, there is a company D with subsidiaries E and H. E has a subsidiary F and an associate G. H has a subsidiary I. All are unlisted companies. Net worth of E is 300 crores. All other companies is 250 crores. To which company would Ind AS be applicable? Now, E is covered by Ind AS more than 250 crores. Unlisted company more than 250 crores. So, its holding D also will be covered. Its subsidiary and associate also will be covered. So, D, E, F and G are covered. H and I, they are not going to be covered because they are only fellow subsidiaries. H is a fellow subsidiary of E. They are not going to be covered by Ind AS. But for the purpose of consolidation, they have to prepare another set of financial statements as per Ind AS. Only then D can consolidate. In their separate financial statements, H and I are going to follow the 27 notified accounting standards as per company's accounting standard rules, 2021. Previously, it was 2006. But for consolidation, they have to prepare another set of financial statements as per Ind AS. Alternatively, they can go for voluntary adoption of Ind AS. Instead of preparing separate financial statements as per AS and preparing one more set for the purpose of consolidation, if they want, they can decide to follow Ind AS for their separate financial statements also. But the thing is, once they choose that option, it is irrevocable. They cannot go back to AS. The next is illustration 7. ABC is incorporated in a foreign country. That is, ABC is a foreign company. net worth of rupees 700 crores. It has two subsidiaries, X whose net worth on 31st March 2014 is 600, Y net worth is 150. So, X and Y, are they required to follow Ind AS is the question, on the basis of their own net worth or on the basis of the net worth of ABC. So, ABC foreign company, that is not going to be governed by Indian accounting standard. ABC is going to prepare its accounts as per the foreign country. Okay. So, it is incorporated in a foreign country. Subsidiary X has to follow Ind AS from 1/4 for the accounting period 1/4/2016 because it is crossing 500 crores. Y is only a fellow subsidiary of X. So, Y will not follow Ind AS, right? It is not mandatory. So, answer is ABC incorporated in a foreign country, not incorporated under Companies Act. Therefore, it is not governed by Indian laws. It is not going to prepare as per Ind AS. X is covered, it has to prepare as per Ind AS. Another practical point is both X and Y, for the purpose of consolidation of the parent company, they will have to prepare another set of financial statements as per the foreign country's applicable accounting standards. So, if it is incorporated in say US, so whatever accounting standards are applicable in the US, as per those accounting standards, they will have to prepare another set of financial statements. Only then ABC can consolidate them, right? In illustration 8, parent is company Y, which is an NBFC, and subsidiary is company X, a non-finance company. Please note, it is not non-banking finance, non-finance, means it is not an NBFC. For company X, Ind AS is applicable for the financial year 2017-18, 1/4/17 to 31/3/18. Y is NBFC. So, for NBFCs, what is the earliest date? 1/4/18, it is greater than 500 crores. Company Y is unlisted having net worth of 400 crores. That means Y has to follow from 1/4/19 only. So, now we are in a unique situation where the parent has to follow only from 1/4/19, but the subsidiary being a regular company, not an NBFC, is following from 1/4/17. So, 1/4/17 to 31/3/18 and 1/4/18 to 31/3/19, the parent is not going to follow Ind AS, subsidiary is going to follow Ind AS. In these 2 years, what should the subsidiary do to help the parent consolidate? Subsidiary should prepare another set of financial statements as per the 27 notified accounting standards under Companies Accounting Standard Rules 2021. Earlier it was 2006, right? Next is the test your knowledge question. There is a company, Fresh Vegetables Limited, carrying on wholesale trading business in vegetables, and its net worth as on 31st March 2017 for the first time is crossing 250 crores. Till that time it was following 27 notified accounting standards. So, it also has a 60/40 partnership with Logistics Limited, and it has incorporated a partnership firm, Vegetable Logistic Associates, to carry on logistic business. It also has an associate company, Social Welfare Limited, a Section 8 company doing charitable activities. It is an associate of FVL. So, we have to examine the applicability of Ind AS on VLA and SWL. So, on this partnership firm and Social Welfare Limited. So, as far as FVL is concerned, there is no doubt, it has to follow Ind AS. It is meeting net worth criteria on 31st March 2017 from the next year, 1/4/18 to 31/3/19. For that year, it has to follow Ind AS. So, what about this 60/40 partnership? So, first of all, this is a partnership firm. It is not going to be covered by Ind AS. It has to be a joint venture company, okay, holding subsidiary, joint venture or associate companies. Only then they are covered by Ind AS. So, that is the first point. Second point is, if this is just a joint operation, let us say even if this VLA was a company, VLA Limited, let us say, and this 60/40 agreement was only joint operation, then also it will not be covered by Ind AS. It has to be a joint venture. That means there has to be a share in the net assets. So, the agreement has to be studied. If there is a share in the net assets, then yes, it will be covered by Ind AS. But here it's a partnership firm, so it's even if that was the case, it's not going to be covered by Ind AS. Okay. So since the facts of the case are not clear, you have to give all situations when you give the answer. SWL Limited will be covered by Ind AS. It doesn't matter that it's a charitable organization, it is a company and it is an associate company, therefore it will be covered by Ind AS. So answer for FVL, there is no doubt it has to follow Ind AS for the financial year 14/17 to 31/3/18. VLA, first point is it's a firm, partnership firm, so therefore not covered. Even if it was not the case, if it was a company, we'll have to examine whether it's just a joint operation or a joint venture. If it's a joint venture, then Ind AS will apply. SWL, Ind AS will apply, right? So hope you found this video useful. If you would like clarifications or more details, you can refer the detailed discussions. The link to those videos is included in the description below. All the best for your exams. Namaste.